Welcome to the LA Insider, the podcast that takes you inside the neighborhoods of Los Angeles through the voices of the people shaping them. I'm your host, Jason Anderson, a real estate agent in LA and your guide to the stories behind the city. Each week I sit down with local entrepreneurs, community leaders, and business owners to uncover what makes their corner of LA special, from hidden gems to big ideas and neighborhood-changing insights. We'll also explore the path to success that brought each of my guests to where they are today, their challenges, wins, and the lessons they've learned along the way. Whether you're exploring where to live, grow a business, or just want to understand the real LA, this show is for you. Let's dive in. Thank you everybody for joining us. We've got a great guest today. We have KC Chohan. Hello, KC.
Hey, Jason, how's it going?
Great, thank you. Thank you for joining us. KC is the founder and CEO of Together CFO, a Los Angeles-based financial services firm specializing in advanced tax strategies for high net worth individuals and business owners. With over a decade of experience, KC develops sophisticated wealth management solutions, integrating tax minimization, asset protection, and legacy planning, using complex trust, donor-advised funds, and private foundations. So, Casey, we all love saving money on taxes, right? That's something that I think all of our listeners are interested in. So can you start by telling us what are the billionaire secrets that wealthy people are using to minimize taxes that the average person doesn't know about?
Well, it's all to do with charitable giving. And for the people listening, I'm using quotation marks with my fingers
Sure.
because the way that the elites and the billionaires are all structured is that they are giving from one hand and they are receiving in the other hand. And we can see that very recently from a donation that Warren Buffett donated $9 billion from his foundation to three of his kids and gave them all $3 billion each, completely tax-free.
Through
Now,
foundations. Wow.
if you or I were to do that, assuming we had that much money, it would fall under the gifting tax exemption, and we would get an exemption up to $13 million. But anything above that would be taxed at 40%. But because these elite families and billionaires know how to operate the system better at a higher level, they can pass on billions of dollars completely tax-free, totally eliminating inheritance taxes and death taxes, and often capital gains taxes too.
So could an everyday business owner apply something like this legally?
Yes and no. The cost associated with creating something like that it usually means it's for the multi seven-figured entrepreneur. So if you're making a couple of $1 million plus in your business, or you've got a net worth above 5 million at the lowest end, those types of structures start to make sense as a good solution. If you're below that threshold, I think there's plenty of loopholes that you can use that are relatively cheap or free to implement to reduce your taxes.
So it sounds like there is some opportunity for the average guy.
Oh, 100%. Yeah, there's a lot of things that you can do to reduce taxes for the average person, but for the richer people or the higher net worth people, that's the difference between creating a structure like a private foundation or a DAF compared to using loopholes, which will serve you well up until that first $2-3 million.
So for the person that's working on their tax planning, are there any common mistakes that people make that they just should know better?
Yeah, there's so many. Like 82% of people overpay on taxes because of common mistakes, right? And
Sure.
the simplest one is that they are not proactive about tax saving. They kind of leave it to the last minute. They'll check in once a year, if that, with their CPA, who's always stressed out at that time because all of his clients are calling him in that 1 month period, right? So the way to do this better is proactively rather than reactively. Have quarterly meetings with your CPA team and make sure they are working efficiently, right? Because a CPA is not working for you, CPA works for the government. Their job is to make sure that you calculate, file, and pay your taxes. Their job isn't to reduce your tax bill. That's the job of a tax strategist, not a CPA. And often people get confused by that or don't even know that that's a real thing.
Yeah, is that a total separate job description between those two positions, or can one person be both?
One person can definitely be both, but it's to do with their incentives, right? So, as an example, a CPA, generally speaking, is going to get a flat fee per tax return filed. Let's just call that $1,000 for ease of use.
Sure.
So, whether that CPA saves you 100,000, a million, 10 million, they're still going to receive $1,000. So, how much of an incentive are you giving them to save you money? Zero. There's
Much,
no
yeah.
incentive. As opposed to a tax strategist who's usually going to take a percentage of taxes saved. So if that person saves you a million and takes 10, 20%, you've still saved $800,000 compared to the other scenario where you've overpaid, but you've only paid your CPA $1,000. What would you rather do? Would you rather have scenario two where you've made a net $800,000 saving, but you paid the guy who saved you at 200K? Or would you rather pay the full $1 million to the IRS and pay the guy $1,000 for doing your tax return? So if you had those two scenarios, which one would you pick?
Oh, I would definitely choose option two.
Yeah, and I think most people would, but most people don't think of it like that. They'll think, oh, 200,000, 20% seems like a lot. Well, it's a lot of nothing. You're paying 100% in scenario one to the government. Why not be more proactive? And then you can put that money to use with your family, with your legacy, with your charities, or whatever it is that you wish, rather than funding a government that's so highly inefficient, that's in a huge deficit, that's in its own death spiral.
Is there a threshold between a person who just needs a regular accountant versus somebody who needs a tax strategist, like an income or tax payment threshold?
Yeah, I think so. I think if you've got a very simple return, let's say you're a W-2 employee and you have minimal deductions, no kids, not married, then a simple CPA is definitely the way to go. As you get more complex and you start growing, let's say you're a business owner, married, kids, you get a whole host of additional options that are available for you. And that's where you need an advisor that is going to work for you and get you the maximum deduction possible. Like, as an example, if you have kids and you're not taking the children's exemption, or if you're not paying your kids through your business, you're losing out on so much money. If you've got a house and you're not renting it back to yourself using the Augusta loophole, or if you're not buying assets for your business and depreciating them, or real estate, there's so many different things you can do depending on what level you're at. And you should be doing as many of them as that makes sense before you build a structure that's going to then create a lasting legacy.
And I bet most people don't even know that those things exist.
Yeah, unfortunately, so yeah, you're correct.
And you mentioned having children. What about people who are trying to um, pass wealth on from generation to generation? What techniques do they use?
Yeah, so the best way to look at this is think of ownership and control as two kind of key elements to this. If you own it in your own name, then it's going to be taxed to you because taxation follows ownership. But control is really what you want without ownership. If you can separate the two, that's where you get into the powerful tax exempt entities. So you can donate an asset to a foundation that you fully control. And that's the best workaround for not having to worry about inheritance taxes, because now you've got a tax deduction for the initial donation in. So your taxes are going to come down, but you're still controlling that asset in the name of the foundation, which hopefully never expires because it's not a person. And that can then live on indefinitely through multiple generations.
Hmm. And what about using trusts? How
So
does that
trusts
work?
So trusts can be used in various different ways. Our favorite type of trust is a complex trust. And the reason for that is a complex trust is the only entity that can donate up to 100% of what it makes to charity and get a full deduction. So, as an example, if you make $1 million in your business and it flows through to you personally, you get a 30% deduction if you donate to charity.
That's a big difference.
Huge. So you're going from 30%. If you donate to a donor advised fund, you could get up to 60%. But if you use a complex trust, you can donate 100%. So it becomes a very powerful tool for people that want to ramp up the philanthropy and want to get more assets into a tax-exempt environment.
Is there a lot of expense in creating a trust like that?
It depends on how many elements, because that's one piece of the overall pie. So it just depends on how many pieces they are and how intricate it is. But generally speaking, if you went to a family office or UBS or one of the big boys, Morgan Stanley, and asked for a structure to be built as part of their family office services, you'd be talking $5 million a year to run and operate that. Now, that is a lot of money to a lot of people. But what we do at Together CFO is we've taken one small component of it, one slice of the overall pie, which is the philanthropy and the tax savings and the longevity. And we put that into its own package. And that's so much more reasonable than the 5 million that those guys charge. So you can, on the lowest end, 50K, it could go up to maybe 150K, just depending on how many levels that you want. But generally speaking, 50, 60K can get this up and running.
Okay, so it sounds like you've got a product that can be appealing to a large audience.
And that's literally the inception of the company, has been to take these structures that have been out of reach of so many entrepreneurs, take the most powerful pieces of it and bring it down to a level that is attainable for a successful entrepreneur.
That's awesome. Now, what about people who are trying to, grow their wealth, but they also want to be careful about the risk? What kind of a balance is there between, having low risk but then high growth?
It's two opposite sides of the spectrum, right? I think
Yeah.
everyone should review their own needs, because no two families are the same, right? Are you married? Do you have kids? How old are you? How old are the kids? Is there grandparents involved that you need to take care of? There's so many different factors. So I think a good way to look at it would be to see, what is my personal overhead, my real actual day-to-day, month-to-month overhead, and what number is that? Is that 10,000 a month? Is it 100,000 a month? We've seen a very wide spectrum of that. And then on top of that, how much am I making and how much can I put to future growth versus how much do I need to survive and live on day to day? And figuring out what those numbers are so that you can adjust accordingly and actively make a plan around good numbers rather than just guesswork.
And if somebody was going to come to you to work with you, that's something you would probably want them to know up front, or at least you'd help them figure it out.
100%. Yeah. Part of our onboarding is extensively getting to know our clients and figuring out, because they don't often ask themselves these questions. It's uncomfortable, right? Nobody wants to think, hey, I'm 50, I'm in good health. Maybe I live till I'm 80 or 90. How much do I need to survive that long? Taking care of my kids, taking care of my parents. There's so many different factors in there. So it's really important to understand as much of the broader picture as possible.
Definitely. And what would you say are some of the most common misconceptions business owners have about tax strategies?
A lot of people seem to put it off, to be totally honest. What we see is that they'll get so caught up in their day-to-day that they don't really give it the time and respect it deserves, because it's an afterthought. It's always, hey, I'm dealing with a million things, wearing a million hats, fighting a million fires in my business, in my personal life, in my family life, that I'll get around to taxes as a distant afterthought. And if they do that, the only thing that ends up happening with certainty is that they are going to end up paying more in taxes.
Sure. And what role would you say aggressive tax saving strategies. Wait, I'm going to redo that question. What,
Okay.
let's talk really quickly about personal values. What role do you think personal values plays in financial decisions?
What role does personal values play in financial decisions?
Like, for example, should people maybe be investing in things that they really believe in, personally, or are there ways to do that, or just go by the numbers?
Yeah, so for me, firstly, let's be very clear, we're not issuing any financial advice to anybody. This is just
Okay.
our own opinions, right?
Okay, yeah.
Um, but the way I do it personally is a mixture. Is if there's a company that I really like and admire and use a lot,
Uh-huh.
then I would invest in that because the way I think about it is if I like it, I'm sure there's millions of other people out there just like me that would like this.
Sure.
And then the opposite is also true. If I've had a bad experience with something or someone, I'm not going to invest in that. So for me, it's a very personal thing, but let's just use T-Mobile as an example. I was with T-Mobile for the longest time, 10 plus years, and never had any issues until one of their competitors offered me a free year if I switched. So
Sure.
I'm like, all right, well, that's actually a great saving because I'm saving multiple hundreds of dollars by switching. So I went to T-Mobile and I'm like, hey guys, I've been a customer for 10 plus years and I don't want to move, but I will if you can't match this deal. Not the amount of disrespect I got on the phone from these customer service people was ridiculous. And it's like, you know what? It's not even worth not even worth me giving you an opportunity to save the business because they have no control over it or authority to do anything. It was ultimately it. And I had such a bad experience that before that, for the last 10 years, if you'd asked me, would I have invested in T-Mobile? I'd be like, 100% yes. I love the product. It's great. But then that bad customer service experience
Yeah.
would have, has just totally tainted that company for me. So I would never invest in them now. So that's a personal story of investing or kind of feelings that change perspectives. The other side of that would be to have no emotion whatsoever and say, let's look at the earnings, let's look at the trajectory, let's look at the dividends, the PE ratios, and all of the tactical analysis. Does that still make sense? And there's no right or wrong here. It's all personal preference. So for me personally, I like to do a blend, but I also like to think of the bigger, wider economic landscape of what is going on or what isn't going on. So, as an example, the amount of wars that we're in right now, it would probably be a good time to buy into some defense companies because they're going to be very, very busy for a lot of years because the ammunition is so low, right? Um, so just as a macroeconomic, do I want us to go to war? No, I definitely don't. Do I want people to die? No. But the economics of that situation is telling me that these companies are going to get huge government contracts and make a fortune. So from a financial perspective, that's a good investment.
Got it. And then when you do invest in companies that you do believe in, it's almost like it's fun to spend money there because you're just adding to the bottom line of a stock that you own.
Well, yeah, you really want them to do well, right? One, you support them, you believe in them, whether it's on running sneakers that have just come from nowhere and taken over the world because it's a really good product, right?
That's what
But
I'm wearing.
yeah, me too, me too. And
They're
it's
so
like,
comfortable.
but that's the thing, isn't it? That a small company has gone from nothing to $1 billion brand just because of the merit of it being a good product. It can now compete with the likes of Adidas and Nike, which never would have been the case before, right? It was always the top two or top three brands, and that was it. Now it's the level playing. It's more of a level playing field than it ever has been before.
Yeah, it's great to be a fan of a company. So
100%.
so tell me how does a person get started working or having someone like you work for them? And
Reach out to us, right? We start by looking at the situation. So the first thing is how much of a need do you have, right? There's a lot of things you can do for free or relatively cheap. before using a firm like us. So you've got to have a multiple six-figure tax liability that's causing you a big problem. And if that's the case, then it's worth a conversation. So we do free consultations.
Okay.
At togethercfo.com. Go on the website. We also have a free tax calculator on our website.
Oh, that's helpful.
Yeah, so that can, tax savings calculator, I should say, because you can plug your numbers in, and within 30 seconds, you have a good idea of how much you could potentially save, and then set up a call if it makes sense. So it's a free tool that we have. And then in our school community, we have the top 50 loopholes that everybody should be using.
Okay. That's valuable information.
Yeah, it's a great tool. And what we'd suggest is join the community, download that PDF, all completely free, and email it to your CPA. Because what you want to do is you want to ask your CPA, hey, how many of these loopholes have we used and why? So you can then effectively rate how good your CPA is. Did you use all 50 or did you use 5?
They're not going to want to hear that.
And if they don't have a good reason why you haven't been using the rest of them, I think the writing is already on the wall that this guy is very complacent with your business and is definitely not working for you.
Wow. That's a very valuable tool. So pretty easy steps to get in contact with you and get started on saving on future taxes.
Yeah, and we'll send you the links to the website and to the school community so you can put them down below.
Okay, awesome. Well, I'm sure a lot of our viewers are looking to save money on taxes, and they're going to be reaching out for some great advice from you. But before we wrap up today, I do like to ask you a little real estate, because Los Angeles has so many diverse neighborhoods. It's always interesting to hear everybody's perspective about where they live. So what part of town are you in?
Yeah, I live in Century City.
Century City, that's a beautiful place. A lot of people have never even been to Century City because it is a small place, but it's like a utopia. It's so clean. So what do you like about it?
Well, we're in such a great location that we're literally 5-minute walk from the Century City Mall, and we're a 2-minute walk from Roxbury Park. So we've got a park to play. I've got a 1.5-year-old baby, so that's great for the kid. And then the mall has literally everything in there, so it's good just to be able to walk over there and get some fresh air as well.
And then do you have any favorite restaurants or coffee houses that you like to go to locally?
Oh yeah, I love Javier's is our favorite go-to place. And then Pomodoro over in Westwood is our favorite hole-in-the-wall Italian place.
Oh yeah, the hole in the walls are always the best.
Always the best, absolutely.
And then would you say that you have a child, so Century City is a great place for people to raise kids?
A lot of high rises. It's very safe. Yeah, so it's very safe and clean. I think for one kid is great, but then the minute you start getting 2 or 3, you probably want a bigger space and a yard and things like that. But it's great being in a high rise because we've got a beautiful 5-acre lot here that the kids can run around on the grass and tennis courts and kids areas and pools. So we've got literally the resort lifestyle in the middle of like LA, which is amazing.
Oh, fantastic. Well, I'm glad that you found a neighborhood that you love. How long have you been there?
7 years now.
Oh, wow. Okay. So you really like it to be staying that
Oh
long.
yeah, absolutely.
Awesome.
Yeah.
Well, I just want to thank you again, KC, for joining us today. And we'll make sure to put all of your information out there so that people can reach out to you.
Perfect. Thanks so much, Jason.
Thank you very much.
Thank you for tuning in to the LA Insider. I hope today's conversation gave you a deeper look into the people and neighborhoods that make Los Angeles so dynamic. If you enjoyed the episode, be sure to subscribe, leave a review, and share it with someone who loves LA just as much as you do. I'm Jason, and I'll be back next week with another inspiring guest and more stories from the heart of the city. Until then, stay curious, stay connected, and keep exploring LA.